The week of July 22nd may be the largest earnings week of the year, and it kicks off in a very big way on Tuesday, July 23rd with Microsoft, Alphabet, Tesla, and Visa all reporting earnings. And in this video, we are specifically going to take a look at Microsoft and the earnings that they're expected to report. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Before we jump into all of the numbers, Microsoft has actually been in the news for some bad reasons recently. They laid off their diversity, equity, and inclusion team. And just like we've seen with a lot of these big tech companies, oftentimes employees will go out and they will send mass emails to the rest of the company about these layoffs. And this is no different for Microsoft. They had an email that was sent out explaining how these eliminations were because of changing business needs and these teams were no longer critical. And as I mentioned, a lot of these big tech companies have gone through these periods of layoffs, especially in the last 2 years. And Microsoft is one that last year actually laid off around 10,000 employees. And we've seen a lot of these tech companies like Microsoft, like Meta, and a number of others focus on profitability over the last 1 to 2 years. And oftentimes what that has ultimately boiled down to is the laying off of employees. I don't think that this announcement has any effect on their upcoming earnings. However, it could allude to some of their guidance over the next year. They could be thinking that the next year for Microsoft could be a difficult year, and they're already getting ahead of that by laying off a small portion of their staff. We will have to see what numbers they put up on the 23rd, but right now analysts are expecting them to put up an EPS number of $2.93. This compares to $2.69 from a year ago. And overall, this represents a year-over-year growth rate of 8.9%. And to put that a little more into context, over the last 4 quarters, they have grown their EPS by 20%, 33%, 27%, and 19%. So this would be about half of the growth rate that we've seen over the course of the last year. However, keep in mind that Microsoft has beaten analyst expectations each of the last 4 quarters, beating by 4.3% in the most recent quarter, 5.4% 2 quarters ago, 12.8% 3 quarters ago, and 5.5% a year ago. And for revenue, analysts are expecting Microsoft to put up $64.34 billion this quarter. That's up 14.5% from a year ago when they put up $56.19 billion. And 14.5% growth year over year is more in line with what we've seen from Microsoft's revenue growth. They put up 17% last quarter, 2 quarters ago 17.5%, and then 3 quarters ago around 12.7%. And even past that a year ago, they put up 8.3% growth. So it is still a high growth rate at 14.5%, however slightly down over the last 2 quarters. And the reason these growth rates are so important is because they affect valuation. And when we're talking about valuation, we're talking about the forward P ratio, which for Microsoft is currently sitting at a 33.9. So if we start to see these growth rates in terms of their top and bottom line numbers start to fall, this could actually start dropping their forward P ratio and thus bring the stock price down. So to put this number a little bit more in context, right, for Microsoft sitting at a 33 forward P ratio compared to the S&P 500, which is sitting at a 22.72, it's about 10 to 11 points higher than the S&P 500. In terms of the NASDAQ 100, which is sitting at a forward P ratio of a 29.64, it's only about 4 to 5 points higher. So what we can find is we can calculate a growth rate for the S&P 500 and its earnings. And here is an estimate for that. So based off Q2 2024, analysts are projecting that the S&P 500 will put up $52.98 of EPS. In 2025 Q2, they're expecting that to grow to $61.67 of EPS. That's a growth rate of about 16.4% year over year. So if Microsoft comes through with a year over year EPS growth rate of 9.8% and the S&P 500 is projected to grow their EPS by around 16%, there's clearly a very wide discrepancy there. And ultimately what that affects is valuation, because if Microsoft is trading at a 33 forward P ratio, however the market is only trading at a 22 forward P ratio, we could start seeing a rotation of money out of stocks like Microsoft and into either general index funds or other companies within the S&P 500. However, keep in mind that even if we were to see investors trade out of Microsoft and into, let's say, an index S&P 500 fund, that would ultimately ultimately still benefit Microsoft, we would see the stock drop. However, because Microsoft makes up around 7% of the S&P 500, it would still benefit slightly from this rotation of money. Personally, I'm not sure what's going to happen during this earnings season. I would not be surprised if we see a lot of companies hurting. I don't know if it's going to translate over to a lot of these big tech companies, but I do have a bad feeling that a lot of these smaller companies are going to show some cracks and weakness in the economy. And this could start translating over to big tech companies over the next 2 to 3 quarters. I just don't know if it's going to hit yet in this quarter. So it'll be interesting to see Microsoft, Alphabet, Tesla, and Visa all report their earnings and what guidance they provide moving forward. So keep in mind, I do own shares of Microsoft, but the way I'm kind of positioning myself for this earnings season is I'm stacking a lot of cash. If we see these companies come through with positive earnings, then great. My positions will continue to grow and my portfolio will overall be in a better position. However, if we see any sort of weakness in the economy and throughout some of these earnings, then we could potentially see the market start to fall, and then the cash position will come in handy as I can start to deploy it into some of these companies. So we will have to wait and see how earnings unfold over the next few weeks. But keep in mind, do not buy a company just because I talked about it here on YouTube. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what do you do to have a space party? Check the comments down below for the answer. Thanks for watching.